Coming up on Global Business, European Central Bank officials are meeting on Thursday amid a turmoil in the financial markets that could force them to drop plans for another hefty hike in interest rates. China's property sector continued to recover in February with an increasing number of Chinese cities reporting growth in new home prices. Inbound and outbound visits from China more than doubled in the 2 months after the country eased COVID-19 controls and opened its borders. From CGTN headquarters in Beijing, this is Global Business. I'm Michelle Vandenberg. We start with the ongoing turmoil in the global banking sector. Shares of troubled Swiss lender Credit Suisse rebounded around 20% on Thursday. It came after reports that the bank would get a $54 billion lifeline from Switzerland's central bank. This news seems to have restored some confidence across Europe. Major stock indices such as the FTSE 100, CAC 40, DAX, and the Pan-Europe stocks all saw mild gains as of midday, but still not enough to recoup losses from Wednesday's sell-offs. European shares closed down 3% on Wednesday, dragged by the plunging banking stocks. Now, for more on the latest on the ground in Europe, let's cross over to Ross Collin in Paris. So, Ross, tell us more on the interest rates decision of the European Central Bank. Will we see a tightening of regulatory oversight due to the banking turmoil?
Yeah, in the next hour, we're expecting the European Central Bank President Christine Lagarde to lay out the latest monetary policy decisions that the ECB is taking before the turmoil linked to SVB Bank and also to Credit Suisse in the last week. We have seen Christine Lagarde give the forecast that it's very likely there would be an interest rate rise. However, bearing in mind the problems with the Silicon Valley Bank and Signature Bank and their takeover by regulators in the United States, and also what we've seen with Credit Suisse and the need for an injection of $54 billion from the Swiss National Bank to prop up Credit Suisse in the last 24 hours. There could well be some different information that she is using to inform that monetary policy decision than she would have had about a week ago. The situation was completely different now if you look at the picture financially from the United States and in the last 24 hours from Switzerland and the impact on some of the other stock indexes across Europe. So Christine Lagarde does have a decision to make if she wants to try to cool off the European economy, to try to get inflation back to 2%. That's the target the ECB wants it at. It's well below where it is, well over 8%, as consumer prices continue to rise across the European Union. So the ECB does have a decision to make. It's the first major decision by a national or international banking central bank. If you look at the Federal Reserve, they've got a decision coming up. The Bank of England hasn't taken a decision since we've had the Credit Suisse or the SVB problem. This is the first major decision by an international central bank that is going to be closely watched to see which way Christine Lagarde goes.
Yeah, thank you so much for the update. That's our reporter Ross Collin in Paris for us. Falling value of long-term U.S. Treasury bonds was a major factor behind the cash crunch at Silicon Valley Bank. The bank's woes came at a time when the Treasury yield curve was inverted, meaning the rates of longer-term Treasury bonds were lower than short-term ones. This downward curve is widely recognized as a worrisome trend that could lead to a recession. It also indicates that investors are less confident about future growth. Similar situations have happened multiple times in America over the past few decades, and they were mostly followed by a stagnation or worser events. For example, the U.S. Treasury yield curve was inverted much of the time in 2006 and early 2007. Then in 2008, the U.S. stock market crashed and long-term Treasuries soared even more. Chinese tech firms who has business dealings with the failed Silicon Valley banks have little to worry about for now. That's according to an economics professor in New York, where many Chinese companies are listed. The concern, however, remains over the willingness of U.S. banks to take a risk on these startups. Jody Jacobs filed this report.
The collapse of the Silicon Valley Bank even sent shockwaves across the ocean, especially with Chinese tech firms which had for years used the bank's services to do business in the US.
The level of embedded involvement that Silicon Valley Bank has sort of at the core of innovation. And, obviously, even though innovation is a global phenomenon, one of the big drivers of that engine is Silicon Valley, and 50% of Silicon Valley resides pretty much at Silicon Valley Bank. And so I think for any global startup, global venture capital firm, even limited partner looking at venture capital firms or looking at startups, you're kind of inextricably linked to this large institution that's at the core of that industry.
The deposits of those Chinese firms are safe.
I instructed my team to act quickly to protect these interests.
In what many have called an extraordinary move, the Biden administration guaranteed that SVB customers would have access to all their capital. Chinese startups have for a long time relied on Silicon Valley Bank for venture capital funding and general banking in this country, especially as more traditional US banks turned them away, claiming the risk was too high. This economist says it may prove difficult for Chinese startups to find other banking options.
U.S. banks are much more cautious in their foreign relationships. They worry about know your customer clauses, anti-money laundering. Political risk between the U.S. and China is growing. And this was always a bank that was really, really eager and willing to partner with Chinese firms and help bring them to the U.S. Can you find new management at this bank or another bank that will be as so amenable? And I think the concern is it might be hard to find. Certainly the large US banks don't look ready to take those kinds of risks.
In the fallout from SPV's collapse, banking could be a barrier to other Chinese companies that want access to US capital markets.
The fear or concern is, depending on who buys them, are they still going to be in business? Is there another bank that can play this role of kind of introducing Chinese firms to US markets, to US capital markets?
Some economists fear that the collapse of the Silicon Valley Bank could trigger a wider contagion. They'll be watching next week's Federal Reserve Bank meeting to see if it backs off its aggressive interest rate rises in favor of boosting confidence in the U.S. financial sector. Jody Jacobs, CGTN, New York.
Now, to understand more about the fallout from the Credit Suisse issues, we're joined by Giorgio Prodi, Associate Professor of Applied Economics at Ferrara University. Professor, thank you so much for joining us. So, are we seeing panic? We are seeing some rebound in the stock markets today, but are we seeing panic among investors because of the Credit Suisse storm? And how difficult is it to restore investor confidence?
Well, Credit Suisse is a huge bank, so whenever a huge bank has this kind of a problem, you can have a bit of panic. But you have to see what we saw in the last hours, make us a bit more, sure that things can be controlled. Of course, to restore confidence, what the Swiss authorities did in these last hours has been very important. But I think they need to think something about the long run for this bank, because the problem of Swiss bank were very well known since months, if not years. Probably the bank is too big, even for an important country like in Switzerland. So I think that there's need for better regulation, also for what we saw in I would say also in the U.S.
Yes, speaking of what we saw in the U.S., can the rest of the global financial system withstand the spillover effects of potential U.S. financial risks?
Well, it is true that financial markets are deeply interlinked, but if bankruptcy remain limited at the few things we saw, I think there will not be a problem. But again, given the low level of regulation for regional banks in the U.S., we cannot be sure 100% that we will not face a similar problem in the next days. Of course, the government has been very active in trying to limit the problems, but if more than one appear, also the national government cannot do everything.
Now, combined with the latest interest rate decision in Europe, which is coming out in about an hour, and the Federal Reserve's rate hikes, how much pressure will it bring to Europe's central banks? Will the European financial system be able to withstand such rapid rate hikes at this point?
But first, let me say the increase in interest rate was necessary to stop inflation. Inflation is a common enemy. We didn't have in Western market high inflation for many years, but still the problem, the damage that it can do to GDP growth and most of all to wealth distribution is huge. So it's very important to take inflation under control. For sure, higher interest rate will change financial system, but also real economy. The private equity industry will be completely changed. You need to different strategy, different investment selection, and of course, different if you have zero interest rate, if you have 3 or 5% interest rate. Well, EU financial system being more regulated, I think will withstand higher interest rate without I would say, big problem. Of course, the risk of too high interest rate due to all the problems we are facing, the Ukraine war, could lead us in a recession is there. But still, we are not there. And if the rest of the world, like Asia, will continue to grow, starting from China, I think that the risk of the recession will be much lower.
Mm-hmm. But after the frequent explosions of American banks, are there any concerns in Europe? And is it considering slowing down or ending interest rate hikes early?
Well, again, interest rate is the policy on interest rate is related to inflation. Mm-hmm. Well, I have to say that we saw only minor, at least in the last year, minor bankruptcy in the U.S. and till now, well, I would say well controlled. It is possible that problems will continue. EU and the US may slow down the increase of interest rate, but the goal remains to take inflation under control. Remember that still interest rates are well below inflation, and we don't have to forget that the new situation has been what happened from 2009 to 2019 with zero interest rate, not what we're seeing today. So probably the speed of interest rate was the speed of increasing interest rate was unexpected, but at least in part need to block inflation.
Yeah, great points. Thank you so much for your time. We really appreciate it. That's Giorgio Prodi, Associate Professor of Applied Economics at Ferrara University for us. Now moving on to some other business headlines that we're tracking this hour. New Zealand's economy shrank 0.6% in the December quarter, well below the country's central bank's forecast of 0.7% growth. Expectations are that the Reserve Bank of New Zealand may pause its aggressive rate hikes. A board member of South Korea's central bank told reporters that the bank needs to pay closer attention to core inflation that takes out volatile food and energy prices, even as headline inflation came down to a 10-month low. He said there were certain factors at play that was responsible for the slowdown in headline inflation, but not the core. Indonesia's central bank has paused its rate hikes though inflation is still high, and decided to intervene in the currency market. Rupiah, the country's currency, has been volatile recently after the closure of 3 U.S. banks and ongoing problems at Swiss lender Credit Suisse. Now, the second edition of Financial Sector Conference wrapped up in Riyadh, Saudi Arabia. The event was held at a time when the global financial industry was witnessing a turmoil of sorts, with banks falling and shares crashing. Yet, the global financial community took the chance to share thoughts about sustainable growth model and other major issues related to the sector. Now, our Xu Xinchen is on the ground in Riyadh, and what do you have for us there, Xinchen?
Of course, Michelle, definitely, and we are seeing the volatility from the financial market globally, and after fell off U.S. banks as well as right now from Credit Suisse. But the global financial community gathered here in Riyadh are really trying to put on the agenda to stabilize or find out ways to discuss possibilities to stabilize the market or whatnot, and of course that future growth agenda for 2023. And I have a special guest here with me. I have Mr. Bob Diamond, an experienced banker, former Barclays CEO, and now the founding partner and CEO for Atlas Merchants Capital. So I want to ask Mr. Diamond, so what is happening right now? Why we're seeing so much volatility, especially during the past week and in recent days?
So I think you've had a couple of incidents in the U.S. With Silicon Valley Bank and the guaranteeing of deposits by the Fed, the FDIC, and the Treasury on Monday morning, we had a good old-fashioned bank run on Silicon Valley Bank. And I think the actions that the U.S. regulators took to protect the depositors, but to penalize the equity holders and the bond holders was appropriate. And I do believe that the U.S., one of the great strengths of their financial system is the thousands and thousands of small banks. And I think having a higher level of guarantee on deposits over time is probably the solution.
Yeah.
And so, you know what it's like. Banking is such a confidence game.
Yep.
And when the confidence is shaken, there's other things that will come of it. I think here in Europe, the Credit Suisse situation was very different than Silicon Valley, but I think unlike 2008, when many banks had some of the same issues, this is pretty much isolated to Credit Suisse and to Switzerland. My sense is that the Swiss regulators have control of the situation.
Yep.
And so I think this will be isolated to Credit Suisse. And again, in banking, when investors lose confidence and sell the stock, when depositors lose confidence and pull the stocks out, it has a pretty big impact. So I think the Swiss regulator as well calmed the situation this morning with the announcement of kind of a backup liquidity facilities. But this wasn't necessarily about some recent problem in Credit Suisse. It was really a confidence game, and we saw deposits coming out and investors exiting.
But let's speaking of the confidence, and especially from investors or depositors, how's the sentiment right now? And especially, will there be like a larger ripple effect from the recent incidents? Because the U.S. will likely continue to raise interest rates, and of course, the same case for the European Union.
Yeah, and I guess we'll hear on some of those today, actually, very soon. And my sense is that, the Fed waited too long to address the raging inflation that got up to 9%, as you know. And I think since then, they have taken action, and I think they've been pretty effective. And I think inflation has peaked. I think the Fed will hold the course. I think the recent actions around Silicon Valley Bank, if the Fed were debating 25 or 50 basis points, I think they would probably err on 25. But I don't think they're going to change their course, which is one or two more rate increases, get up to around 5%. And I think the Fed will be patient and watch how things play out for the balance of the year. And our sense is that inflation has turned over, and it's heading more toward 3 to 3.5% by the end of this year. Then the big question is, will the Fed keep pushing, keep raising rates to get inflation under 2%? And our view is if they get it down to 3 or 3.5%, the Fed will be quite pleased.
Definitely, the market is expecting more interest hikes from the Fed, and of course, that if that can keep the inflation in check, that will be the good news. And of course, here in Riyadh, Saudi Arabia, a lot of decision makers are also talking about possible international collaborations or co-op different ways for growth models that can sustain the global economy, and also, of course, to build a link between the financial world and the economic situations that we're facing, slowing down economy, and of course, rising inflation, etc. But of course, the FSC 2023 has wrapped up a comeback after being disrupted by COVID, and a great chance for financial specialists to get around and to talk really issues into the year of 2023. And that's all I have, Michelle.
Thank you so much for that. That's Xu Xinchen for us in Riyadh, Saudi Arabia, and Bob Diamond. You're watching Global Business, still to come. China's property sector continued to recover in February, with an increasing number of Chinese cities reporting growth in some new home prices.
.360-degree profiles of industry movers and shakers, tech mavericks, and policymakers. We drill down on their success. We ask how they set strategy and how they navigate in an increasingly competitive market. Real talk, real business. Join the conversation. Biz Talk, only on CGTN.
Now, this is just in. The European Central Bank raised interest rates by 0.5 percentage point on Thursday, following through with its earlier plan to curb inflation in the Eurozone and meet the 2% inflation rate target. Earlier, traders had been reducing their bets on the hike following the collapse of California-based Silicon Valley Bank and falling share prices of Swisslander Credit Suisse. Now, back in China, its property sector continued to stabilize in February. Home prices in an increasing number of cities rose in February, government data showed on Thursday. Among the 70 large and medium-sized cities surveyed, 55 reported growth in new home prices. That number was 36 in January. Meanwhile, prices of second-hand homes rose in 40 cities last month, up from just 13 in January. New home prices edged up across most of the major cities on a monthly basis, especially in second-tier and third-tier cities, which has seen flat growth in January. On a yearly basis, new home prices in first-tier cities grew nearly 2%, while price slowdowns in second-tier and third-tier cities eased further, but are yet to return to growth territory. And in terms of improving housing support system, China has set the goal to help resolve the housing problems of new urban residents and young people. The government will support people in buying their first homes and better their living standards. This is according to the government work report delivered to the National People's Congress earlier this month. The country has been working on the matter for the past decade. There were 42 million housing units rebuilt in rundown urban areas, and over 100 million people have moved into modern apartments thanks to government-subsidized housing projects. China's top economic planner briefed the media on Beijing on Thursday about China's achievements in epidemic prevention and control, urban and rural medical and healthcare, and environmental protection work. Strengthening capabilities of epidemic monitoring and early warning, promoting environmental infrastructure construction such as sewage facilities and waste treatment plants, and improving garbage sorting system were among major topics. Officials of the National Development and Reform Commission stressed accelerating the construction of national emergency medical rescue bases and national and regional public health centers. They also emphasized on improving the level of emergency medical rescue for public health emergencies and the ability to prevent and control major infectious disease in China. Now, from Athens International Airport to Greece hotel and restaurants, there are high hopes that the return of group tours from China will help prop up a vital pillar of the Greek economy. Evangelos Sipsas has more from Athens.
It has been over 3 years since Chinese tourists could visit Greece with no restrictions, and now it's open again. No negative COVID tests, no quarantine, just a passport, few clothes, and good vibes. With the tourism season just around the corner, the country is bound for another record-breaking season as last year levels exceeded pre-pandemic numbers, with the aim this year being even higher since the country is open for Chinese nationals, and business owners seem excited.
Last year was an amazing year for us. We didn't expect so many people, especially when the pandemic's still on people's minds. But seeing that China has now opened up and knowing how much they like to travel here, I think I'll need more chairs and tables.
Last week, China unveiled a second list of destinations to which travel agencies and tourism services providers can offer group tours starting in March. The countries include France, Spain, Italy, Denmark, and Greece. The move to expand the number of destinations comes as China's overseas tourism industry has seen a quick recovery during the past month. But opening up didn't just start now, at least for Greece. Last December, the country welcomed the first direct flight from Shanghai after the country's flag carrier Air China announced the launch of routes to Athens International Airport. Later on, it also added flights from Beijing. Before the pandemic broke out, around 200,000 Chinese nationals visited Greece. Now, with direct flights resuming and no restrictions, the Ministry of Tourism is expecting more than 600,000 and a significant boost in the country's revenue. After years of turbulence, the Greek tourism season is on the rebound, with levels even higher than those before the pandemic, and that's without Chinese tourists. Now, with 2 direct flights from Shanghai and Beijing, and that expected to increase, and travel agencies offering packages and promotions, things are looking up for both countries. Evangelos Ipsas for CGTN, Athens.
Now, inbound and outbound visits from China more than doubled in the 2 months after the country eased COVID-19 controls and opened its borders. That's according to the country's National Immigration Administration. From January 8th, when China relaxed COVID restrictions, to March 7th, the National Immigration Administration recorded over 39 million visits into and out of the Chinese mainland, more than twice the level seen in the previous year. On February 25th alone, the figure reached 1,013,000, marking the first time the number crossed the 1 million mark since 2020. The agency said nearly 2.5 million inbound and outbound trips were made by various means of transportation during the same 2 months period. That represents a 60% growth on a yearly basis. And that will do it for this edition of Global Business here on CGTN. I'm Michelle Vandenberg in Beijing. Thank you for watching. Bye for now.